And we are live. Wow, look at us. Look at those offices. Look at Alex. Why you got glasses, Alex?
That's it,
Wow,
man.
looking good, looking good.
Yeah.
Saul is muted. I'm going to unmute him.
Hey
All right,
guys, how are
perfect.
you guys? Welcome everybody.
Wow, it's
Welcome,
great
everyone.
to be together, all of us in one room. Nice.
It really
It's
is. It
pretty
really
cool,
is.
man.
How you
I was
doing,
gonna
Victor?
comment
How
your
you doing,
background,
Alex?
Victor, but you're just traveling all the time. So, but it's right. You should get one of those portable green screens. You can just bring your office wherever you go. But this is going to be an amazing panel discussion. We're going to be talking about the subject that we've covered throughout the week, and we're gonna throw some questions out. We've collected a bunch of questions from you guys, from the audience, the viewers, and we're gonna go through some of those questions. And please, if you do have any more questions, just feel free to ask them in the comments in the chat here on YouTube, and we will do our best to help you out and answer all of the questions. And I hope you guys enjoyed this week. It's not quite over. This is the last live stream, but I really do hope you enjoyed watching the content that we have for you as much as we did creating it. It's been really a pleasure to create the content and engage with you guys. The feedback has been amazing. I'm going through the comments on YouTube, and yeah, it's just amazing. And it really does seem like we've helped a lot of people. From the webinar on risk management, for example, that you did, Victor, there were so many people saying that they had no idea about that fractional risk, that fractional risk. So that's really an eye opener for a lot of people. So it's really cool to be able to help everyone here.
Yeah, it is truly a pleasure of us, and I think I speak for all of us. It's been a pleasure doing this week, preparing, because we know we are instilling great habits and knowledge into traders, things we know that helped us in the past during our journey, and we gladly want to others to have these skills as well.
Yeah, and I
Yeah,
think
definitely.
the whole objective for today's session, guys, is we threw a lot of content out there through this week. We went from strategies to psychology to risk management, and now we want to maybe try to put everything together into this session to try to see how we, on our day-to-day routine and basis, we use all those different concepts now all together into our trading routines and trading practices.
So that's right. We've, like I said, we collected some questions, and Victor is the master of questions. If you've been around, the live trading room, if you've seen previous live streams, you know that this is the guy with the questions. He's just great with the questions. So we're gonna leave it up to Victor to take care of the questions, and
Yes.
maybe start introducing ourselves.
Yes, I would like to let's start with having everyone introducing themselves to the audience by answering a couple of giving some short answers to these questions. And they are as following. What was the motivation for you to start trading first? How long have you been trading? What is your trading style? And on what time frame do you trade the most? I know it's a little long list, but
Think about
I will repeat them to. Let's start with Alex, if you don't mind, Alex. What was your
Gosh,
motivation to
how
start?
strange is it going through this type of panel? We're in the trading room every single day with the majority of people here come and speak with us and chill with us while we're live trading throughout the week. So it's a little bit of an interesting concept we got going on. But I've been trading now for about 6 years. I got into trading through crypto. Obviously, everybody knows I'm big on crypto. So I got trading on crypto. Then when I started at the 5ers, I got introduced to currencies and started trading currencies on lower time frames. So that's it. I swing trade mostly cryptocurrencies, and then I'm more of a momentum kind of trader on lower time frames for currencies, and that's it. Why have I got into trading? Do you know, it's something, when you test something out and then you just suddenly just enjoy it, you love it, it kind of brings the good side out of you, sometimes the bad side, and it's just this constant challenge. And I'm a person that just loves challenge, and it's always been something that has been able to keep me interested. Whereas a lot of other things, you know, I've started and I've done in the past and I've put them to one side. This is something that is always getting me to the next level and making me work on myself as well. So that's why I've been trading for so long.
Nice, nice, Alex. I love those glasses, by the way. What was it that brought you to trading? What was your motivation? What attracted you to become a trader?
Yeah, I guess similar to all traders out there, you know, I was working night shifts in a hotel desk in the reception, and I was looking for extra sources of income. That was 15 years ago already, and that's how I think some kind of advertising from a broker or something like that, make money from online, something like that. I click on that, and then I just got hooked into this world of trading. You know, prop firms were not around back then, and I just started, and that was the start of this journey for me.
I see. And you said 15 years ago, that's when you started. Have you been trading 15 year all that period?
I have, ups and downs. It took me 2 years to basically understand what's this about and make it into the, let's call it, consistency to what I thought back then was being consistent or profitable at some point. And they're just, an ongoing learning curve into mastering what I do into the trader that I'm today.
What about your trading style? How can you, if you let people in the audience understand what kind of trader are you? What is your trading style and what time frame do you trade the most?
Yeah, so if you see me in past trading rooms, and probably today we'll have the chance to demonstrate. I'm just waiting for a trade to trigger. With the time, I understood I needed to go to the lower time frame. So a lot of people describe me as a scalper because I trade off the lower time frames, like a 1 minute chart. So this is not how I used to trade back in the days. I used to trade from the dailies, and then slowly I understood I needed to stop with this overnight trading and holding trades open overnight because that was very stressful for me. That was affecting my night routine and sleeping routine. And slowly I understood I needed to go into this lower time frame. So today, I consider myself kind of a scalper. And yeah, that's what I do on the 1 minute time frame mostly.
So basically, you went through a process of knowing yourself as a trader, your trader's identity, and which time frame fitted you best, and that is the lower time frame.
Absolutely. I think some of the things when we talk about trading psychology, and we spoke about the blind spots, for example, and this is a huge topic because it's trying to understand when something in trading is not working for you, what is it? And it's very hard because might be millions of reasons different for each one in the world. So trying to understand why trading is not working for yourself, if you don't find that, if you don't recognize that blind spot, it doesn't matter how many books on trading psychology and emotions control and all of that, it won't work because you need to understand you need to understand the source of what's you're struggling with. So it took me years to understand what was my trading personality and trading profile and risk appetite and all of that, and then to tune my trading because I was already used to something different. So I needed to drop all that and start again, which is very painful, into a style and a routine that would suit my personality. But if you don't go through that process, trading will be very challenging.
Very, very, very enlightful. Jonathan, how about you? What brought you to trading arena? Why are you a trader?
Yeah. Okay. So I think the motivation to start trading. I think everyone would say money, but everyone wants money for different reasons. And I think for me, money is a vehicle to create the life that you want. I think money is really the tool that you need to create the life for yourself and the future for your family, and and I think that's why I kind of went into trading, because I wanted that, not only money, but also the time freedom and the freedom to be able to make the money whenever I wanted, right? So I think trading for me equals freedom. And I think that's the biggest that's the biggest thing for me. That's the biggest reason why, you know, I'm trading, and I've been trading for 8 years. I started in beginning of 2017. Is that 8 years? I'm not going to do the math. I think it's 8 years. And I went into Bitcoin because I bought Bitcoin, and in the bull run of 17, you know, it just went straight up, made a lot of money. I think I lost almost everything in a matter of weeks, you know, from the top. But that got me interested. And I was like, okay, so it's actually, you know, I had a pretty huge unrealized profit and loss. So I'm like, if I just sold, I would have made a lot of money, right? So I started looking into the of, well, then, you know, next time, how can I sell the top? Like, what can I use? What kind of tools can I use to be able to make some money on the next bull run? And the answer to that was technical analysis. I started looking into that, and I saw it as sort of magic, you know, like something magical, and it was very overwhelming at first, but slowly but surely I started understanding the technical nature of the market, and I've been obsessed ever since. Like I'm reading, like I'm still 8 years later. I get a technical analysis book by my bedside. I'm reading about technical analysis when going to sleep. 8 years later, like probably a bit insane, you know, but still, that's the level of commitment I feel like you need to have. I'm not sure what you said,
Yeah.
Alex, but probably something funny.
Yeah.
No, I think a
And
lot of people in. Go ahead. Go ahead.
my trading style. So how do I trade? I trade. I feel like I want to be a scalper. You know, I want to trade like Saul, but that's just it's just too stressful. You know, it's like I'm not able to do it. I'm just not able to do it. So the way I found my success is obviously zooming out, looking at the higher time frames, trading more something that's more aligned with my personality, which is moving a little bit slower. You know, looking at the daily, entering on the 4 hour, things like that. So more swing trading, and yeah, I think that's it.
All right. Thank you. Thank you, all three, for your questions, for your introduction to the people in the audience. And I'll answer the same question as well. What was my motivation to start trading? Well, one of the things that what I was thinking when the thing is, I wanted to earn a lot of money. Let's be honest. That was one of my motivation. I wanted to not have a cap on the how much I can earn. And just about any other career, you have a cap, right? Even if you're the best one in class, there is a ceiling. And in trading, it seems, at least back then, now it's still true, but back then, for sure, there was no ceiling. It was unlimited profits. And that was so attractive. And the other thing was that I wanted to have to be my own boss, right? There are many places, many career choices you can make to be your own boss, but trading by far is one of the ideal jobs, if you call it a job, a career, where you don't have a boss. You are the master of your decisions and the consequences thereof. So that was the motivation for myself. I've been trading 6 years now, and it took me about 3 years to get profitable. So that's my journey so far in terms of time. My style, I trade a lot of, or I look at a lot of time frames, but I start from the H4 going down all the way to the 1 minute. But that doesn't mean I don't trade the daily and the weekly, because I sometimes also trade those depending on the setup. So basically, I don't really fit in and one specific box. I would say I'm a day trader with the occasional swing trades in between. And the time frame is just what I said. I used a lot of time frames, but basically for H4 going all the way down to the smallest possible on most platforms, which is the M1. So there you go, everyone. Now you have an idea of us as traders, experienced traders, and let's get going with the discussion. The first topic that we're going to be discussing today is mindset. Right? We all know how important it is for a trader to have the right set of abilities in that realm, right? Mindset realm, because it affects how all the decisions you take, how you cope with losses, and in what degree you stick to the strategies, which is absolutely important if you want to be successful. So I have the first question. How do you manage the emotional roller coaster of trading, especially after a streak of losses or wins? Who wants to answer this first?
I think I can take this one. So I think I think what you need, like you need the same thing as you need to have a balanced life and whatever work you're doing. If you want to make a, if you want to be able to do a good job, you need to be able to have a balanced life, personally and professionally as well. And with trading, it's a very high risk environment, a very high stress environment. So it's important that we create routines and habits around our life that strengthen our emotional balance. So having positive routines and habits is very important, especially if you're trading full time, and like me, I got my office at home. For me, it's very important to have a high level of discipline. So what I do is, first thing when I walk into the office, I try to, like, I'm not perfect. I try to do this every day, but we all fail sometimes, right? But I try to meditate like 5 to 10 minutes every morning to be able to get to a clear state of mind. And then after that, I write a couple of sentences in a physical journal to prepare myself for the trading day, writing about things that I did good and bad last day. And I try to bring that knowledge with me into the new day. So trying to set up for the day. And when I do have a lot of losses and I'm in a losing streak, what I try to do is take a step back and reflect on what's happening, what's really happening and I try to do it from a unbiased perspective. And for that to be possible for me, I need to take a break from trading. I need to be able to close out all positions, maybe take a 24-hour break, take a step back and really assess the situation without being influenced by moving P&L, things like that. So for me, and back testing, really, when I'm in a drawdown, one of the biggest problems that I'm having is I can sometimes lose confidence in the system. So what I like to do is I like to stop trading for a while and focus a little bit on back testing, because that back testing results that will improve your confidence. And if that doesn't happen, if the backtest result shows that, well, wait a minute, there's a problem here, then you don't have anything to worry about, because then the drawdown is based on the system not performing well, and then you know what to do. You need to start developing. So I think, yeah, having positive routines and habits and a plan for what to do when things go south is super important to have that safety and confidence in your system, really.
I'd
Very
like to
nice
add to
answer.
that. I definitely agree with a lot of that, but also practice makes perfect. And when you're putting in the reps every single day and you're actually trying to learn from what you're actually doing, you're not just putting on trades for no random reason. You actually got a structure to what you're doing. And if it's not working, it's not working, but you're still trying to learn something out of that process. And the more reps that you put in, the more that you see the patterns, the more you see the market works, the more you understand certain things that's going on, and then eventually it starts to click. But just turning up, putting high, big positions, buying prop firm accounts, blowing those, putting money in a broker account and blowing that, and not actually learning is going to be the downfall for a lot of new traders. You really want to cut down on the leverage. If you're going for a losing streak, the first thing that you want to do is cut your risk. Cut your risk in half. Get to the point where you don't actually care if the position that you've just put on is going to be a loser or a winner. It's just minimal. It doesn't even matter. And once you get the confidence back up, and this is when you're in a losing streak, once you get your confidence back up, then start adding back to the old position size that you had before. But again, screenshots every single time you take a trade, video recording, screenshots, and reps and reps and reps. And eventually you're going to come into the office, you're going to look at the screen. Sometimes you won't even need to journal or meditate because you've just done it so much, and you're like, you know what, I've seen that so many times, I know what it's going to do. And then you go and put on the trade. So that's all. Reps.
Nice.
I want to look at a couple of just a couple of questions from the audience as well before we move on here. Because I want to be mixing the questions that we have saved from the audience and the ones we have live here as well. So I was going to throw this out here to all of you. Like how long did it take for you guys to become profitable from the first time when you actually decided to, like, I'm going to become a trader, I'm going to start studying technical analysis?
So for me, this kind of question it's very difficult because you're asking this question because you want to understand how long it's going to take you from getting that to that position. And one thing you've got to do is stop comparing yourself. Stop comparing yourself to what other people are doing, what this person's technique is, how that person trades. You really got to understand, first of all, if you're going to be successful in this type of industry, you've got to understand yourself and how you trade. Now, for me, it took 4 years. For Saul, it probably took around about 2. For Victor, it took 2. I don't know, for Jonathan, probably even around that 1 or 2 years. Everybody, sometimes even 5 or 6 years. It's just not about how we became profitable. It's about how you can become profitable. And the first things that you can do is understanding yourself. I'm super impatient. I don't like waiting for setups. If I see a setup, I get in market and I'm in the trade. Jonathan waits. He's the most patient person in the world. He sees a level. He
No
puts
way.
it a level. Yes, you are, mate. He just gets into the trade that way. So obviously, everybody's got their own what they want to say, but really, stop comparing yourself. Everybody's on their own journey. So,
yeah, well, I think also it's important to understand that when someone says like, "Oh, it took me 2 years to become profitable," but then if you've been trading for 10 years, you have not been profitable for 10 years. There's going to be years during that 10-year period where you haven't been profitable. There's going to be months where you've traded in a way where it's not consistently profitable. So it all goes up and down. It all goes in cycles. We have to understand that long-term profitability in trading is very difficult, and you need to be able to like adapt your systems. But yeah, I think it took me probably really reach a good level of profitability, probably 3 years, I would say. Yeah, like one year to learn the basics, another year to lose money, and then like the third year is when it's like, I gotta stop losing money, and really focus.
Everything clicked. Yeah.
How about you, Sol? How long did it take you, and how was that journey getting to consistency for profitability?
Yeah, I mentioned that in a bit, but I think what we need to, maybe the message we should transmit out there is something we in the office we talk about, we call shades of success, tiers of success, because traders need to go through this process of becoming consistently non-profitable into break even, into consistent, into profitable. So it doesn't matter if you have like a month of profit if afterwards you have 2 months of losses. So we need to acknowledge, if one of us, our own process. So if you were losing a lot of money and now you're losing because of risk management well applied, you're losing a little bit less, or you're starting to get into break-even zone, that's also progress, and that's also good. That's part of the process we need to go through. And then you go into, okay, I tweak my strategy here and there, my risk management, and I make a little bit of profit consistently. And then from there into sizing up, that's also a different skill. So through this process, process of going from losing money consistently into break even, winning money consistently, into profitability, making big money, it might be months, years, couple of years for I guess for everyone. And through that process, you will be learning different skills that you will need to adapt to yourself and learn new things, forget, drop other things. So there's no hard rule of place 1,000 trades and you'll make it, right? It's a very complex profession.
We have a question.
Nice.
I saw a question in the comment here. I forgot to save it here because we got so many questions flying by. But I think one thing that we should address is, this week we had a lot of fundamental events happening around the world. Well, like one big, like the US elections, right? And lots of volatility. And how do we deal with that? Like how I know Alex went straight into a gold short. It made some money on that. I love that. Personally, like we talked about patience, right? So personally for me, I stay out of the market. Not a single trade this week. Not interested in trading. I look at the volatility. I'm like, yeah, this is not for me. It's so there's clearly a difference here, right? There's clearly a difference. Some people want to trade this volatility. Some people really look for those moves, and then people like me who's looking at the higher time frames. I'm like, I want to move a little bit slower. If I'm going to be trading for the next 20 years, I know that or maybe not 20 years, let's say 10 years, and I know that.
Hold on, I want to be trading in 20 years.
Dude, in 20 years I'm retired. I'm on a beach somewhere. I'm probably going to be trading on that beach though, but I'm not going to,
No, but go ahead.
Yeah. No. So how do we deal with that? Like,
Yeah,
Alex, you want to be trading?
Alex, can I? Yeah. Sorry, go. You want to go ahead? Take it.
No, I was just going to say, as traders, we want volatility. Like this is, I've been waiting for this day for the whole year. I've been waiting for this day for my whole life. Where crypto's going crazy. It's super volatility is our friend, especially for a trader, a momentum trader. What you see on the chart is what's happening. So if you see it, trade it. So that's it.
I'm proud of you, Alex. You've really grown into a very
when I'm around you guys all the time. When I started at the 5ers, I got videos of me on my computer trading when I was first getting into the 5ers.
But if I can expand of what Alex is doing is saying is, there's no right or wrong environment. The market is doing what it's doing. There will be times of more volatility, times of less volatility. Directional movements, ranging movements. There'll be all sort of things, and we need to understand what we do with that information. Okay, what strategies should I be applying now? What mindset should I be applying now? Because if I'm on a very very low volatile market, very ranging, without enough money to be made, and my expectations from that market is to make millions, maybe that's the wrong mindset and wrong expectation. So for every market scenario, we need to have our toolkit ready, right? We need to, in this morning course from Jonathan, there was this pre-trade checklist, right? So what's the environment I'm looking to trade, and I'm applying the right strategy into that market movement and market volatility and volumes and directional or ranging market, and how's my psychology and how's my risk appetite aligned to that market environment. So that's really the things we need to master more and take time to applying more and more as we grow as traders, to understand that the market is doing what it's doing, and we need to adapt what we do to the market environment.
Couldn't agree more.
Yeah, I think I would say what we always say, that you need to know yourself, your identity as a trader, to know what kind of time frame you need to be trading and what kind of strategy. That also holds true for what kind of environment you thrive on. Some people need that movement, like Alex. He needs movement. Volatile markets, and apparently Jonathan thrives better when the market is not doing that, when it's a little more ranging, not ranging necessarily, but as usual, right? And so it's important having your identity, know your identity as a trader, to know where do you perform better. Knowing that is very important, is crucial, right? You don't want to be doing something that you're not good at in trading, right? So if you know your strength, then you can stay out of the game, as Jonathan does when there is US election, and Alex will especially wait for those days to get started.
I'd like to say that I trade best when the markets make sense from a technical point of view, and if you just take a quick look at Euro USD, it makes absolutely no sense whatsoever after the election. Like it had the most beautiful 4-hour trends. It had the most beautiful break and retest on the 4-hour and the break of structure. And then all of a sudden, the US election comes along and it's like, yeah, okay, all of your setups that you've been planning for weeks, let's take those, let's throw it out of the window and let's stop everyone out that thought about trading that trend. So I think, yeah, I think it's just it's a personality trait as well, and it's all about, you know, getting that trading system that fits with your personality. I mean, some people like to trade based on fundamentals, and of course, then when the U.S. election comes up, they probably want to have positions lined up for whoever they think will win, and things like that. Yeah.
I want to say something about what you just said, Jonathan. When the market doesn't make sense, one of the things we could do is zoom out, because indeed the H4 on the H4 level, it doesn't make sense that the market did what it did. You know, just looking at it technically without taking into consideration that there was an election. But if you look at it on the daily, maybe we can look at it. You know, later on, if you look at it on the daily,
we can pull up the chart right now if you want. We can pull it up right now. I think the audience probably wants to see what we're talking about.
Yeah.
Let me pull it up right now.
Yeah, I'll put mine as well. Okay, I will. Let me check the. There we go. Yeah, so mine is up, and if you go to the H4, indeed, it doesn't make sense, right? We had the most, as you said, the most perfect reversal. It had a quasi. It was looking very promising on many time frames. We had alignment, all of that, and comes the election, and we had this huge drop, breaking all the structures in the market that were so promising. However, if you zoom out on the daily, and especially on the weekly, it makes a lot of sense that it had a pop from this order block. In my case, I use order blocks. It had a pop on this order block, but apparently the fact that it has a structure to the demand area doesn't mean that's going to be the reversal point. But it had a pop, but apparently that wasn't enough. And where does it go to? It goes to the next order block. So to me, it makes a lot of sense that this order block did what it was supposed to do, which is attract buyers to get into the market. They did. The market did what it was supposed to do. We couldn't predict that, but where did it go? Exactly to the next order block. So it makes a lot of sense to me. And when at least when it isn't obvious, one of the things we could do is zoom out and see if it makes sense on another time frame, because probably there's something else at work when the time frame you're looking at doesn't make sense.
Now, while we have the chart up here, let us know in the comments if you do have any specific questions on technical analysis, any type of indicators, anything that you want to ask us in terms of what we can show you here on the charts as well. So let me let us know, and we'll bring that up. Spa, the penguin, wants me to show show him what I talked about on EU. What exactly does not make sense to you? Well, this right here, this. So let me walk you through the idea that I had on Euro USD. So my idea that I had, now actually, I got. Well, I wouldn't say I got lucky on this one, but this was my my winning trade right here, where I got in right here, and it I got to show you guys. This is so cool. I got gapped to TP, like went from entry to TP. That was the Monday gap, which is I would not really recommend this, to keep a trade open like that, because obviously if I would have been gapped to the downside, slipped to the downside, that could have been quite bad. But that was the general idea. And then, of course, when I saw that gap, I thought, okay, there's no way. And you had this move to the upside, and this setup was not filled. I'm like, okay, this makes no sense to keep the orders in for that one. But the general idea for this is based on what I talked about on Monday, I believe. So if you look at this structure right here, it's just it basically shows us a very good market structure where we could, you know, how I talked about ranges at the tops and then accumulation at the bottom. It can be, you know, big distribution ranges. It can be smaller accumulation areas. So it doesn't really matter that this is just a very big range that I'm looking at. And you can also be, of course, looking at this area as the range that broke. It doesn't really matter. This general area is where the market obviously did shift in sentiment, and we did start this beautiful downtrend right here. And I'm just gonna mark it out, not perfect, but just like this. And what we see here, and I'm gonna just mark this out as a general low. So imagine that we do have like a double bottom here, and then this would be sort of the structure break here. And that's the idea. So the idea here would be to wait for EU to hit that high time frame level, form some type of a reversal structure, be it a you know, higher low with higher high or double bottom or whatever. But whatever the pattern is, a Quasimodo or head and shoulders, inverse head and shoulders or whatever, there's going to be a neckline right here, right? And then you had that break and retest of the neckline. That was the idea. And what I mean by the markets making no sense from a market structure perspective should be quite clear with this candle right here. When I see things like this, I don't want to be trading that move, because on the 4 hour, this to me looks like I'm trying to catch a falling knife. So where would I enter this? It's below support. It's below support. Do I want to short it? Of course I don't want to short it. Like I'm not going to short this because it's probably going to reclaim that level. I mean, it's insane volatility. It's probably going to come up. It overshot the ATR massively. It's probably going to recover, but I don't know that, right? Because this is weakness. We don't want to be buying weakness, right? But then, of course, it's starting to come back up. But now the structure is starting to make sense, because now we can start looking at this level and we can say, what happens if we have a rejection here? Well, now it kind of makes sense, because now we have a structure. So a move up here and a double top and a break and retest of that M structure would give me the exact same setup as I had here. And that, to me, needs to happen in a slow manner. I can't have extreme volatility in these patterns. So I trade best when there's less news events. So a week when there's a small number of news events, that's when I perform best. So what I see is stay out of the market when there's major news event. But then, of course, a trader like perhaps Alex, who's looking at maybe EMAs on the 15-minute, can get in when the volatility is actually happening, you know. But I need to wait for a 4 hour candle to close. Well, when that 4 hour candle is closing, Alex has already entered and exit 2 trades, you know. So it's just a very big difference in trading style. And for everyone watching here, you need to understand who you are as a trader. You know, are you a scalper? Well, then scalp. You know, you should not be swing trading if you're a scalper. And if you have the mentality of a swing trader, I would recommend that you look into the book Thinking Fast and Slow, because it really gives you an idea of system 1 and system 2 thinking that I've talked a lot about, and understand who are you, because there's a clear difference between a scalper and a swing trader. And the faster you find your personality as a trader, the quicker you'll reach profitability.
Yeah, that's spot on, Jonathan. I think you're hitting some good points there. Before we go to the technical technical part of this discussion, and there's one question I think people in the audience would be dying to hear us talk about, which is, how do we manage FOMO? How do we manage that urge to overtrade? Because that is one of the biggest enemies of any trader, right? That itch to put on a trade, that excitement. How do you? It's so tempting. I mean, let's be honest. Who doesn't like opening a trade? But how do we manage that impulsiveness in trading? Alex has a deep side.
No, I just don't think. I don't think. Obviously, everybody has these little trades that they put on out of boredom about. But FOMO, I think the more that you mature as a trader, I think the less FOMO you actually get, and the more definitely. there is a position trade that I had on FTM in crypto, and I held that for months on end, and it came back to me. It came back to the lower areas of where I got in, and I got out for a little bit of profit, but not everything that I wanted to. I actually then saw it blast up and left me, sidelined. I could have jumped in, and I definitely could feel myself. Oh, that's so annoying. I've left. This was my biggest bag. I spent months in this trade, and now I've got out. And then, I think at the end of the day, the market is always advertising for everything. You've got many things to trade. You've got many things to do. And at the end of the day, if it's not this trade, it's the next one. There's two different things with FOMO and then just trading out of boredom, okay? Trading out of boredom, if you don't want to do that, then get up and don't be in front of the computer. If you're in front of the computer, and sometimes we've been in the live trading rooms, me and Jonathan, and we've put on boredom positions with small risk, and it does happen. But if you're going to do that boredom trade, do it with no risk, do it on a demo account, or do it with a tenth of what you would normally put on just to get it out of your system. You've got to just work with yourself. You're unfortunately not a machine. You can think of yourself as a machine and have your different processes, but you are going to slip up. But that is just totally okay. If you slip up, just put things in place. That means if that slip up is not going to hurt you. So if you want a boredom trade, do it, but do it on a teeny bit of risk just to get it out of your system. And FOMO, obviously, the more you get in, the longer you're in this game, I think FOMO is less relevant, to be honest.
How about you, Jonathan? What do you think can the people in the audience apply to help them manage their FOMO urges and over trading urges?
Yeah, so FOMO and over trading is two different things, right? And for me, FOMO doesn't exist because I've been trading long enough to know that I don't care. Like I'm looking at Bitcoin, for example, it breaks into new all-time highs. I kind of like I knew that was a possibility. So why would I look at that and say like, oh, I gotta buy more Bitcoin. I gotta get in. Like with time, and like we're professionals, right? We know what we're doing and why we're doing it. And to me, FOMO doesn't exist anymore. In the beginning, yes, it did, because I could see a stock or an asset just completely just go crazy to the upside, and I really felt like I want to be in that. I want to make money on that. But now I know that doing that, following that, I'm going to lose money. So for me, FOMO doesn't exist. But over trading, on the other hand, it's 100% real. But my over trading does not come from FOMO. My overtrading comes from impulsiveness. So Alex saying that I'm very disciplined. Well, I'm not really disciplined. All I do is I have a set of rules that I follow. I have I got this checklist right here, and this checklist forces me to be disciplined. And I'm very impulsive. That's the thing. I'm not really patient at all, but I'm disciplined. And disciplined people will not be impulsive if they follow a plan. If I throw this away, I'm going to take a lot of trades, and I think over trading is really the biggest issue. So people talk about FOMO, but don't focus on FOMO. Focus on over trading and why you're over trading, because a lot of times FOMO will not be as big of a problem as you think, but revenge trading and over trading, taking more setups than your system allows, that's going to be problematic. So I think, yeah, having, we talked about checklist. I gave you guys my checklist. If you've done the assignment, you should have a checklist by yourself. You have your own checklist now. Print that out. Put it on a desktop. When you get to the live trading room next week, I want you to post that. I want you to comment like, what's your checklist? Let's go through it. Let's work on it together, right? That's the goal, really, because it doesn't matter if you're not this, if you're impulsive or not. Just stick to the plan, and this is not going to be a problem. Now you might say, well, I can't stick to the plan. Well, figure it out, because you have to. You gotta look yourself in the mirror and say, you gotta follow this plan. Otherwise, it's going to be problematic. And you have to be honest with yourself. You got to be a little bit, tough with yourself, and really force yourself to follow the plan. That goes for everything. It's just trading, it goes for everything in life.
What I do for managing over trading, FOMO isn't an issue anymore, as doesn't affect me as much anymore. But one of the things that this helps not only FOMO but as well over trading. What I do is I record everything and I review it, and I use the data that the performance of those trades that I took that were out of my trade plan, that afterwards I would say they are the product of over trading, and if they were FOMO, then FOMO. And I will analyze them and ask and just let the data tell me, do they have a positive expectancy? Are they profitable, right? And that feedback loop all automatically, because everything I do, I look at the performance of what I did and I try to correct myself based on what I did. Automatically, when I go do over trading, I will see that my profitability goes down. And since I'm constantly doing that feedback, that review, automatically that makes this is what I need to work on. That trade was not part of the plan. This wasn't part. This is, I was too late. I shouldn't have taken this trade, and so forth. So to me, the antidote to these managing these temptation to overtrade is looking at your data and making sure that you're always sticking to the plan, because my profitability, my edge lies in me executing my trade plan, because the data, I already know that I am profitable with my back testing data and my forward testing. But the issue is I need to keep on doing that and executing that trade plan as best that I can, so that I can get the same results. So to me, the antidote is looking at my data ongoing every day. My performance, is it part of the plan? And I've seen that as long as I do that, my results will be comparable to my back testing, and I'm doing great.
Absolutely. I relate to that, Victor, because we always throw this like a mantra, process over outcome, but it's so true, guys. Like, as long as you're following your system and you're focusing on trading on taking these good trades that go by your system, you're not responsible. You can't impact on the outcome of the trade, right? You will take good trades that follow your system, and eventually some of them will lose money also, right? But you will handle the revenge trading, as you mentioned, Victor, by following that process and not focusing on the outcome, but on the process, and making sure you're taking only high quality trades. I would just only add, there's no much to add to this answer, but for me, going as I went to lower time frames, that really helped me with the FOMO side of trading, because I knew, in a couple of minutes, in a couple of hours, there will be a next setup. So instead of waiting days for the setup that will give me the signal to enter a trade, I know on a 1 minute chart, on 1 hour, I'll have multiple sessions. So if I miss out on one setup, in a couple of minutes, couple of hours, the next setup will be there.
Just to quickly, this comment right here, I know that we had a session with me going through a backtesting template. So what I can do is I can add the backtest template to the description of this live stream. And also let me know, guys, if you want me to go through this backtesting template and show you how it works and do some more live backtesting with you guys in next week's live stream. So let me know if you want that, and just let me know in the comments. And another interesting comment here was from Carolina, where she says swing trading is more stressful for me. And reading this, I think, for me, this sounds crazy. I mean, how could swing trading be stressful? But then I remember, like Alex says, like he can't go to bed, he can't sleep if he has an open position. And to me, I love it. I love going to sleep and think, like, I wonder if I'm gonna wake up with a TP or stop loss being hit in the morning. Like, I love that. Like, I look forward to that. It's like two things that I really look forward to in the morning. Is the MetaTrader alerts and coffee. That's two things, that works great for me. Like, I sleep like a baby. When I don't have any positions on, I'm like, I wish I had a position on,
But that's the importance of knowing yourself, because I can't sleep when I have something open. I would wake up at 1, 2, 3 just to look at my phone, it's horrible for my sleep routine, for my sleep hygiene.
Absolutely.
So that's knowing yourself, knowing thyself. It's so important. But great answers, guys. Let's move on to the next. Although we have already touched upon topics on this topic, let's talk about a little bit more about our technical approach to trading. Um, how do we? That's that question for everyone. Do we evaluate the effectiveness of our strategy over time? Do you do that? And what do you do? Do you adjust every time? How often do you adjust that? Or do you just leave it as it is and you trade it forever the same way you just, from the beginning? Do you adjust or not your strategy based on your performance going forward? That's the question. Who wants to go?
I can take Saul. You can take that, or I'll take that if you don't.
Yeah, I
You
can
want
take
to?
I can take it. I can take it also. Maybe I can share my screen also to.
Yes, please. Let's do that. Let's try to use our screens as much as possible, because I'm sure that people want to see what we're actually doing in markets as well while explaining it.
So if you want, I can share. If you
Yep.
So you can see my screen now. Let me see if I can make it.
Can you
It's a bit,
just
it's a bit
maximize it?
squarey.
There you go.
How about
There you
now?
go.
Nice.
Yep.
Perfect.
Yes. Perfect.
Okay, so I was managing a trade. Maybe we can go through that afterwards. But we mentioned priorly that the market changes. Okay, the volatility changes in the market. If the market is going directional or is going expansionary or on a consolidation, it all the time changes, and we need to adapt our approach to market conditions, right? And we can take maybe a pound, for example. Maybe let's go to the hourlies, or even to the 5-minute chart. So we can see there's different behaviors on in the market if we compare a choppy channel to an impulse, a hard impulse, or if we have areas of a movement like that against maybe a sideways movement like this one. Okay, so if we're trying to, we need to understand our strategy, what is meant to what market conditions. Is our strategy meant to be applied on a directional market or to a sideways market? And myself, you've seen me trading, I'm always trying to catch these reactions on the market from key points. But I always take into account if I'm joining a trend, or if I'm working in a in a neutral bias environment in which the market is going just sideways. Okay, so I all the time adapt my expectations of how many pips I'm going to catch on each reaction, depending on market context. Okay, so if if I had this maybe let me zoom in a little bit and go back. Okay, so if I caught this push to the downside, and then this this pullback, and I'm trying to catch the continuation, I will have larger take profits that if I'm trying to catch now the reaction, okay, of this key level right here. So when volatility is high, when we're on a directional market, I will try to catch more pips. When volatility is low and I'm on a consolidation market, I will try to catch less pips. Okay, and I'll try to all the time adapt my lot size and the ranges I'm trying to catch to the context of the market. And the best way to understand, am I doing things wrong, is if I'm going through drawdown periods. We all the time traders are very scared of going to drawdowns, and I think with prop firms and trading the prop firm accounts, traders don't spend enough time in drawdowns. Okay, they just prefer to lose the account and start over than trying to work in the drawdown environment. But actually, drawdown is the best teacher, but because it will show you first risk management, how to recover from that drawdown, and second, because it will guide you, it will signal you if you're doing something wrong, or if the strategy you're applying is the wrong one to the current environment. Okay, so for me, if I'm constantly going into these losing streaks or drawdown periods, I say to myself, okay, I'm doing something wrong. That's what raising the flag. So you're doing something wrong, either yourself, your management of the trade, your execution, or the strategy. So check what's wrong, because you're going into more than usual losing streaks.
Nice. So basically, what you're saying is that you look for what market conditions you are before you start trading, right? Whether
Absolutely.
you're ranging, whether you're impulsive market, and based on that assessment, you adjust your strategy for how far you're targeting and for perhaps how often you're going to be, trading.
And how aggressive I'm going to trade on that day, everything. Yeah, correct.
Yes. All right.
Yeah.
So that's a very nice. So you read the market and you let the market tell you how you should, how often and how you should apply your strategy. That's very insightful. How about you, you guys, Alex and Jonathan? Do you guys change your strategy or the application of your strategy based on the market conditions, or do you just you just execute your plan regardless of how the market is going today or yesterday or tomorrow?
Yeah, so I would put myself in the class as more of a discretionary trader. So most of the techniques, I don't like using the word strategy, because I don't have, it's not, because most of it comes from as well looking at price action, having a little bit of intuition of what price is going to do, and then the techniques is just how I'm getting into the trade and how I'm getting out. They're just things that I do to get the money out of the market. And when I'm going through certain periods, the majority of the time, it's not the techniques I'm using, it's actually an issue with me. So that can be, like Jonathan has mentioned, maybe take a step back, kind of think what's going on. Maybe there's something going on currently in my life. Maybe a good example is I had quite a long time where I was traveling, and then I went. I was not training in the gym for a long time and not doing all my fitness. And then when I came back into the office, I was so eager to get into some trades. I was just losing. I had about 2 weeks of just nonstop losing. And I just had to take a little bit of a step back, realize that was what was going on, and then just take the time to wait for a setup. And then as soon as I actually saw a good setup where I've seen a clear reason to get into a setup and not just, okay, I'm getting this kind of signal, I'm just going to get in, a clear reason with confluence why this is going to go this certain way. And then everything just goes back to normal. Again, it's just coming back, reassessing yourself first of all. If you're more of a mechanical trader, it's going to be a lot easier to see as a data standpoint if it's not working, because for instance, you have a rough win rate, let's say 70%. If you're like Jonathan, you do negative risk to reward ratios. If you're 1 to 3 or something like that, you're around about 40, 50, 60, that type of range. So you can kind of assess if something's totally wrong. When you're in the category of discretionary, you've really got to understand that you're the one that probably has the problem, and you just got to work on that with whatever ways that you got. Go and have an ice bath. Go and have a beer. I don't know. Just do something to try and get yourself back in the zone.
I think what you want to do as well is, so like you have to ask yourself a question. I think this is the key to understanding if there's anything wrong with your system. If there's nothing wrong with your system, you have nothing. You don't need to develop that system further. Like if there's nothing wrong with the system, don't touch the system. So you have to ask yourself, is the drawdown that I'm currently in based on the system or based on mental errors? So depending on the answer to that question, you know what you should be working on. So for me, throughout my trading career, I've seen that there's been probably 90% of the times it's a mental error. But those 10%, when there's actually something wrong with the system, that's when you really got to start working full time and overtime to really try to see what's wrong with the system and how can I fix it. So I think it's very important that everyone asks themselves that question. When you're in a drawdown, go through all trades and ask yourself, is this a perfect trade? If it's not a perfect trade, you made a mental mistake. If most of the trades are perfect and you're still in a much deeper drawdown than you should be in, then there's something wrong with your system. And then you have to look at each of the setups and see what's actually happening here technically. Can I change something? Maybe switch out the RSI to the stochastics RSI, maybe add the ATR, maybe see if the trading within a certain time period might actually improve the win rate, things like that. And that is a really time-consuming process. What's much easier, though, is if you see that 75% of the trades during this drawdown is not perfect. That means you're on tilt. And fixing tilt is much easier, in my opinion, than fixing a broken system. And I've had to do both, right? So I've developed multiple systems. I've had systems that after 2 or 3 years are just not performing as well. During COVID, I have one trading system, worked extremely well. After COVID, stopped working, right? So I had to work on developing a new. But also, during that profitable period, I also had periods where I took trades that I'm not supposed to be taking. And without having a trading journal and without really writing down your notes and your thought process, you're never gonna understand what's wrong. So the key here is to follow your process, not only your thinking process, but also the performance of your system. And you have to treat trading just like you're treating a business. It's not like you can just become a trader and just take a couple of trades here and there. You have to really understand that it's a big business around your own trading. There's lots of moving parts that you have to really take care of to be long-term consistently profitable. And I believe that everything starts with asking that question: is this losing streak or drawdown period based on my system failing or me failing mentally?
Yeah, well put. Well put. I think that question is should be a question we ask ourselves indeed when our strategy isn't performing as expected. Now to the next little question here. Imagine you are you're a beginner trader, and you have a strategy, but you're not sure on what time frame you should be executing this strategy. How do you determine what is the appropriate time frame for your strategy?
That can't be like Victor. If can't be the question. If you've got a strategy, mate, what time frame it works on. Like that's the strategy.
No, but
we'll have to
no,
go
but,
for
but
something
how,
like
what,
if
how do you know that
you know
that
what I'm
is
trying to
the
say,
appropriate
'cause it
time
doesn't
frame?
make,
Yes, I understand. You already
if
have
it works.
if it works on that time frame, but how do you know that that is the most appropriate time frame for the strategy?
Like the optimum. Okay.
Yeah,
Yes.
I guess you
So
don't.
what about
You don't.
you? What about
No,
you
you
for
don't.
this?
I don't think you
This is
know.
yours.
I don't think you know that in advance. You need to go through trial and error. To find out what you apply, if what you're applying would work better or worse on different time frames. The only thing is, how long you want to be involved in that trade. Because if you want to be working on look, I'm not a huge fan of the time frame. Yeah, I think the market is timeless. Those running moving the markets are not looking at time frames to make their decisions that move the market. But if we're talking about time frames, ideally you want to see the full, call it, movement or candlestick on that time frame. So you wanna make decisions every once a day. So go to the dailies. You wanna make decisions each minute, even if the decision is to do nothing but to wait, then go to the 1 minute chart, and then that trial process will teach you a lot of yourself. How active you want to be in the how active you want to be in the market and involved and making decisions and applying everything. Go to if you want to be very involved in the trading, go to lower time frames. If you want to be less involved in trading and more waiting, and you have the patience, then try out the larger time frames. But I think that the strategy, I don't know, should already be tested on a time frame, and then you apply it on that time frame.
Price at the end of the day is fractal. So whatever, the same way that I trade on the 1 minute and the 15 minute is the exact way I get into a position trade on a weekly. The same fib, I get in the same fib, I wait for the same EMAs, I wait for the same accumulation, I wait for the same break of range. It is exactly the same. Like Sal correctly mentioned, it depends is how long you're going to be in that trade. If you're on the lower time frames, you're going to be in and out within a day. If you're sitting on a weekly time frame, you may see a whole year before your trade is actually in and running and it's played out. We started buying crypto back in October of last year. It's now, people are starting to see some gains. So that's if you've got a strategy, it works on every time frame. It's just how long you want to be in the trade for.
Yep.
Basically, what you're saying is that the trader who is starting trading should not let the strategy decide the time frame, but let his identity and his available time decide the time frame he's going to be trading, because that decides the amount of time he's going to be exposed to the market. Is that correct?
Absolutely. I know I get the question where it's coming from, because many times, we go to, YouTube or a mentor, and they teach us a certain strategy that you need to execute on certain time. You try to do that, and probably you find out that be, work better or worse on different time frames. But in reality, again, as Alex mentioned, the market doesn't care about time frames. The market is timeless. The market just is, or buy and sells meeting, and time frames is just a random representation of time in the time frames. It's a arbitrary representation of time in the to represent the price in the market. There could be 2.5 seconds time frames if the broker would show that, okay, or would allow that. But we need to be more focused on patterns and price than on the time frame.
So I think allow me to jump in here and disagree slightly, because it depends. So if you have a technical system that fits in with the framework of price action being fractal, then yes, it doesn't really matter what time frame you're on. But we're talking about thousands of different approaches to the market, even with technical analysis. We also have to remember that there's different technical patterns out there that have different characteristics on the higher time frames. Some patterns are only profitable on the higher time frames and not the lower time frames. And so there is this idea that, yes, if you're trading discretionary and you have an understanding of the fundamentals of technical analysis and you're trading, supply and demand, then of course trading, you can trade that on any time frame. The time frame doesn't really matter. But then there might be trade setups where you're trading a specific wedge pattern during a specific time session. That wedge pattern is only going to be visible on perhaps the 4 hour during the Asian session. So I think what we have to do is we have to understand that it's the data and the testing and the back testing that should lead us in the direction of what time frame we're going to be looking at, because these things we have to take this into consideration when testing as well. So I think there's a difference here between a systematic trading approach and discretionary trading.
Yep.
Yeah, the systematic trading is relying on statistics and probabilities to work out, and that's why they rely on different time. But if I can share my screen for a second.
Yeah.
I'll try to show you what I mean.
Just pull it up.
Yep. Okay, so this is the market, guys. Okay, this is the tick chart on any currency. You can have it, and this is every tick in the market, every buy or sell order is what you see here. Okay, the tick chart, and if you see here, the tick chart has no time frame. Okay, so now in the this is the tick chart for Euro USD, and this is the time frame for the Euro USD. So now I have it on the 1 minute chart, so you can see kind of a correlation of each movement here. And if we zoom in here, you will see each time this goes up or down, it will create every closing of the minute, you will see the reaction on the candles. But then you can go to the dailies here, okay, or to the hourlies, and the tick chart doesn't change. The tick chart, that's the orders in the market. So that's what I mean, that the market is happening regardless of what you're seeing, of what patterns you're seeing on the time frames, that we all try to build strategies around that. So we need to be more focused on how price is being created and the orders being sent to the market. And if you understand that, and with that in mind, then you rely on the pattern you see on the time chart. That's all fine, but keep in mind that those who put in the triggers here and creating the market, they're not looking at the time frames we're looking at. Okay, we're just building these strategies based on technical analysis from patterns we find on the time frames. But it's different from just orders being executed in the market.
Mm-hmm.
You've talked a lot about the tick chart. I remember you saying that because I remember when we had a session live scalping, and I remember talking about how I'm like, you're trading on the 1 minute and everything moves so quickly. I don't understand how you could be trading on the 1 minute. And then you show me the tick chart, and I'm like, okay, so now you're telling me they're gonna start trading the tick chart as well. And you did actually trade the tick chart back in the day, if I'm not mistaken.
Yeah. That's true. Even I think on trading here you can trade from the 1 second chart. But if you can, again, if you're able to read those patterns, okay, we're trying to find on the time on the candlestick patterns or time frames. If you can create a system or a strategy or a way of reading tick charts, you will find all those patterns, all those movements way earlier than you will be able to catch them on the time frames, because you will see a very large drop here on the tick chart, very, very, very large, and way later you will see that signal triggering you on the dailies to go short on the on the time frame. So
Yeah.
Go
Yeah,
ahead.
Yes, I was going to.
It's
I was going to add to that that's the fractal nature of the market, right? You see those patterns on the minutes, on the hours, but as well within 1 minute candle, there's also movement, and those patterns will also be visible. Sometimes my lowest time frame I go to is 1 minute, right? That's where I get my signals. But there are times where I can go to the 15 second or even to the 5 second and see the same the same things that I look for on the 5 minute, etc. And these on those time frame, believe it or not, it works as well, just as fine. And that's the fractal nature of the market. So I can surely attest to that. Alex, you mentioned
I just want to
EMAs.
comment something quickly on the tick chart here, because we do sometimes have, sometimes when scalping in the live trading room, we're looking at the 1 minute, and there's this idea in the trading community that you can't be profitable on the lower time frames. We see a lot of people coming in, they're commenting, oh, they're trading on the 1 minute. That's you're never going to be profitable in 1 minute. It's impossible to trade on the 1 minute. But here we have Saul, the CEO of the 5ers, talking about the tick chart, which is basically it's like looking on the 1 second chart. So I think we all have to throw, just remove that idea that you can't be profitable on this or that time frame. It's not about time frames like we talked about. It's about the fractal nature of price action. It's about supply and demand. So I think it's very important to remember that there's no one system that is better than the other. There's no one approach that is better than the other. Now, different trading systems, they're all as different as we all are different humans, you know, with different personalities.
Absolutely.
Yes. All right. So, Alex, you mentioned EMAs that you look for on the 15-minute. What are the indicators we use as in between the four of us? What are the indicators or other tools we use on our terminals? Let's start with you, Alex, if you don't mind. You mentioned the EMAs. Could you show us some of your EMAs that you use and how you use them?
Yeah, I can do. Let's pull up a chart. People use EMAs very differently, and I personally would use EMAs just for. Let's have a look. Let's put on a 4 hour. I personally use EMAs just for supply, just for dynamic support and resistance. A lot of people would use them for signals, so crossovers, things like that.
Mm-hmm.
All they're looking the same with supply and demand, support, resistance. Everything is derived at the end of the day from price, and moving averages is derived from price. Where price is, how much recent price action it differs from, you know, price action that has happened from older period of time. And all I'm just trying to find is break retests of those certain areas, and that's basically it. If I bring in an example, let's say if I'm getting into a trending market, and what a trending market would be for me, especially if it's a markup, would be higher lows and higher highs. All I'm trying to find is a break, a retest onto the EMAs, and then a continuation. That's all I would look for. If price is deferring quite far away from the 200 EMA, and you can see quite a big area, a gap in price, well away from all of the recent price action, I'd be looking for price actually to fill those areas in. So if you've got closer period moving averages and you've got a longer period moving averages, you're just looking for price to fill in that inefficiency between the two. And that's it. Yeah, got the gold trade on at the moment, which again, you see that inefficiency there. So you've got the 200 EMA, you've got a massive gap, and I'm just looking for price to fill in that gap and fill in that inefficiency with a take profit at that 200 EMA. So that's all I'm trying to do, and that's for what I use CMAs for. I hope that makes sense.
Can we just take a moment and just appreciate that setup, like how nice that is. This is on the 15-minute, but I mean, even on the daily, is perfect breaking retest on the daily. It's just good structure on the 4 hour. It's just that's a really good entry, right there. And solid setup. I think that's nice, really nice.
And all of this, of course, while Alex is casually talking to us, he's having a floating profit of over $4,000. Nicely done, Alex.
Yesterday, that trade.
He would not be this calm if we would say minus 4,000. Just.
I probably wouldn't. The trade yesterday is a perfect example of what we've just gone on about. We had on gold an area where, gosh, you gotta love MT5 and its chunkiness, but you see, obviously, here we've got an accumulation. We've had a break of the range, a retest of the bottom of the range, coincided with the EMAs and a continuation. Like, trading really doesn't have to be too complicated. But the EMAs just help me visualize what price is doing.
You
Any
pay
Yeah,
for
any
it's a
of
your
great
us?
way to. Oh, okay. I
Yeah, any of us
think everyone tried
using
at once.
indicators?
Saul, I would love to ask you. Like, I know you're not using indicators, but if you had to
Sol's using the
use,
biggest indicator in the world,
yeah, yeah,
candlesticks. You know,
sure, but
everybody says about indicators and stuff like that. Candlesticks is the biggest indicator in the world. He uses them on a daily basis, naked charts.
absolutely the charts.
yeah, but if we okay, so let's assume that candlesticks are not an indicator.
Yep.
If you had to put an indicator on your chart, which one would it be and why?
An indicator.
Can I guess?
Okay.
The ATR.
Yeah, probably something like that to tell me, the strength behind the movements that are currently happening in the market. Maybe the volume or something like that, just to understand, before doing the numbers myself, to quickly give me, okay, are we on a high volatility market or low volatility market? But I think the thing with indicators, and um, Alex and I, we talk about this a lot. The thing is, most of them, they give you like information based on past um, performance of the market or movements on the market, and with enough practice, kind of your brain and your eyes, you kind of know what the indicator is going to tell you. So I'm sure if I take away the 200 EMA from Alex and I ask him on a different chart, okay, where do you think the 2 EMA would be? He would pretty much be able to tell me, okay, I think the 200 EMA would be in this area of the chart, and he would be right because he's used it that so many times that he kind of knows the indicator. So I just try to use price as my indicator, call it, or my signal provider, than any other indicator. But I sometimes I do see patterns, and I use indicators like the ATR or the MACD to give me extra confirmation. If I'm recognizing, let's say, a divergence in the market, I wanted to add an extra layer of confirmation. I might apply an ATR or MACD just to give me, okay, this is really a divergence, and then to pull the trigger. But other than that, I think it's best to rely on current data than on past data, which is what indicators give us.
And Jonathan, do you use any indicator?
Excuse me. That's my answer. No, but yeah, I do. I do use. No, I mean, I do use. I play around with quite a lot of different. I play around with quite a lot of different indicators, right? So, I don't show all the indicators all the time, but there's a few that throughout the years I've tested quite a few indicators, and the one that really stuck with me is the stochastics RSI. So that's the one we see here at the bottom. That's, for me, that's one of the most important one. And then of course we have the EMAs. I don't have them on right now. Let's see if I can. I got the indicator here, which shows the EMAs right here, and the ones I have here is the 20 to 50 and the 200, I believe. But usually what I do is I look at the 20 and 50 EMA. But with time, I've slowly started to understand where those EMAs are, even without having them on the chart, just like Saul said. And now what I do is I focus more on price action, and where I would see a break and retest of an EMA, that would also be a break and retest of a horizontal level. Otherwise, I would not take the trade. So a lot of times what I do is I just look at the break and retest of a horizontal level. So for Alex's setup, I think maybe it would have been. I mean, that could have been an entry. And what I've started playing around with as well is looking at volumes. Okay, because I've been testing breakout trading, more of a discretionary breakout approach. And with that, I've also added volume. So I started looking a little bit on volume. And I love the idea of, only buying if we have a resistance here, only buying, like if there's a tick above this resistance, only getting in if there's a very clear change in volume. And as you can see here on gold, you have a very nice a very nice breakout on with the volume here as well, with quite a few nice strong volume bars and candles. You get one 15-minute open and close above this level with a very good push in volume. That could have been a good entry for that breakout, because as we know, increased volume on a breakout adds to the confirmation of that breakout. A breakout on low volume has a very low probability of seeing continuation. But if I had to choose one indicator, I would say the stochastics has helped me quite a lot. And what I like to do with the stochastics is I like to combine different methods. I would like to see, for example, a break and retest of a horizontal level. So we can look at gold here, for example. We can add a horizontal level, perhaps right here, like on that low. And then, of course, as you know, if you're going through the webinars and everything, a horizontal level is more of a zone and not exact prices. So this, what we have here is obviously a break and retest. And what I want to see on that break and retest is right here. You see in the stochastics RSI. Now, I don't have the default settings on here, but on my indicator, when the blue line, which I believe perhaps is orange on the default colors, crosses below the gray line right here, that's a bear cross. And when I see a bear cross with a bearish engulfing candle, or after a bearish engulfing candle, that confirms the setup for me. So we can add, for example, we can add a line on that bearish engulfing candle right here. So when that bearish engulfing candle closes, I want to wait for the confirmation of a bear cross, and that confirmation comes right here at the close of that candle. So these two things together confirms a setup to me. Now we can compare this retest and this retest. Their stochastics is down here when we have that first retest. And then on the second retest with the engulfing candle, it's a bear cross. We even have a bearish engulfing candle right here, but no stochastics in the oversold area. Now, when we look at things like the RSI and the stochastics RSI, so this is the normal RSI, right? There's this thing called oversold and overbought. Now, as you can see, I've changed the indicators quite a lot. It's not the ordinary default settings, but you need to understand that the wording when we say oversold and overbought that doesn't mean anything. Okay, an asset that is overbought is not cheap at all. It's not cheap. The market doesn't work like that. We don't have, at least in my opinion, not in the forex market, we don't have expensive and cheap. There's no discounts out there. So when something is in the perhaps overbought territory and oversold, they can stay overbought and they can stay oversold for a very, very long time. The track record of only following things like RSI in the overbought oversold is terrible. The key here is to look at confluence between horizontal levels, trend lines, or whatever, and the actual indicator.
Yeah, I think the bottom line is that there's no one single indicator that all the time it will tell the reversals or the right signal. You have to use a confluence to increase your probability of being right.
There's one tool I would say that has the ability to foresee what price is going to do, and that is the Fibonacci retracement tool. If that is any kind of, what's those those glass balls that foresee the future, that is the Fibonacci retracement in trading. Like, that thing is just ridiculous.
I thought you were gonna say the MEA indicator.
But I can do a quick demonstration of the.
You have to join us.
I can do a quick demonstration of the Fib tool if you guys want in the comments. Let me know in the comments if you guys want that. Okay, I'm gonna do it anyway. So what we can do is we can switch to. I'm just gonna switch template here, make sure that it's everything's clearly visible. So in the Fibonacci retracement tool, you obviously have a lot of Fibonacci retracement levels, and these are the ones that I think are some of the most necessary ones. If you had to remove some of them, it would be the 0.702 and the 0.8786. But I like these because this area here is something I call the reload zone, which I think is a very important level to look at. But also the 0.618 is around the same area, and I think that's quite important as well. And then what you have with the Fibonacci extension tool is something called Fibonacci extensions, and we can look at this trade example here on gold, and I'm actually going to show you quite an interesting setup. Now remember that we had the break and retest, and I really hope that the stochastics RSI aligns with this one. Otherwise, I will look like a fool here. Let's see. It doesn't, but who cares? Let's remove it. Okay, so if you have a break and retest here of this level, now what you want to do is you want to add the Fibonacci retracement tool from the high of the move. Okay, so imagine that we have the perfect picture uptrend. You want to be adding the fib in a downtrend. You add the fib anchor from the high to the low of the move. Now look at where price is coming in for a retest. It's coming in straight right here around the 0.618, and it's retesting the level. Now, what I like to do with the Fibonacci tool is I like to see a rejection or a bounce around the 0.618, and then I want to see a confirmation by losing the 50 or reclaiming the 50, depending on if you go long or short. Now, this is, of course, a short, so you want to be having that candle closing below the 50. So if you enter on the close of that candle, stops above the retest, look at the Fibonacci extensions right here. So imagine that you're trading something that's trading in all-time highs. Actually, let's go to Bitcoin, because Bitcoin is actually trading right now at all-time highs. And what you have here, let's go to a chart that I don't have in the drawings. So we look at Bitcoin. Now what you have here, let's go to the daily. Let's add the fib right here from that low to that high. What you see is price comes down into that level, forms a bullish engulfing candle right there. And now, at this point, Bitcoin is trading in all-time highs. Bitcoin has never traded this high, but the Fibonacci levels create a really good idea of where price might be going and where we might be seeing resistance. So according to the Fibonacci settings that I have, and I've actually tested this, and a lot of times it does come up and test the 0.618. So in that case, a good target for this move on Bitcoin would be perhaps between 78.5, 79 and 80. So up here you have $80,000. Okay, big, a nice 15% move. But that's how I use the Fibonacci tools. I look for entries using the Fibonacci retracement levels, and I look for targets using the Fibonacci extension. And for all of you watching, you can use, when you watch the replay or when you watch live, you can just pause this and look at the settings that I have here on the Fibonacci tool. And I think even if I don't view the Fibonacci retracement as a indicator. It's more of a drawing tool, right? It's just it's a tool. The way I look at indicators is indicators are tools that are using calculations to give us information about price that we otherwise can't see. But the Fibonacci retracement tool is basically just giving us levels that we can see if we're good enough. I mean, for someone like me who's been using the Fibonacci tool for 8 years, I know where the 0.618 is. Everyone knows where the 50% retracement is, right? So
Yes.
but yeah, super important indicator, like Alex said, which is not an indicator, but let's call it an indicator. It's a tool. Let's call it a tool.
A tool, yeah.
Yeah, I use the
We can
ADR.
call it a tool, guys. Okay, we can call it a tool.
Yeah.
There's nothing wrong in calling it an indicator, Jonathan. It's fine. It's fine. No problem. But
Let's see if we have
yes,
any questions. We've been live for 1.5 hours now. We want to make sure that we give some room to the audience because we do have some questions here. So let me think here.
there's one person in the audience asking myself if I use end of day trading. I don't trade that way, but I know a lot of people who do, and it's a great way of trading. It's on the higher time frames. You wait for the close for the daily candle to make your decisions. It's a great way of trading, but I just don't do it.
Interesting. Never heard of it.
Okay,
The
this one. Let me just cover this one. So I wanna help you out here because I've seen that you've asked this quite a few times. I would say that 103 trades are getting close to the number. Getting close to a good number. I'd say you want at least 100, and if you ask I'd say 200 is a good number. 7 months, however, is not very a big time frame. I would say that take 200, test 200 trades, but split it out over different months and different years, because remember, when you're developing a system, you want to make sure that that system is profitable for perhaps the next 10 years. If it has only been profitable during 2020, it's not going to work. You want a system that's been profitable through different market cycles. So what I would recommend is maybe test 2015, 2021, and then last year. And if you can find 200 trades split over those 3 years and it's profitable with a good statistics, then that is definitely something you can rely on, because it went through different market cycles. You want to make sure that maybe through COVID, maybe through high interest rates and low interest rates and different US presidents and things like that.
There's a concept I do want to go over, something that is probably super important, because I know how many traders fall for it and how many years that I had this issue, and it is it is revenge trading. Now, revenge trading, and Sol has also spoken to many traders in interviews and people. We see so many traders in the 5ers that one of their biggest downfalls is revenge trading. And I feel like revenge trading comes from a few places, and there is a bit of a feedback loop when it comes to revenge trade, which is a want to make money. The want of making money may come from, stuff in your private life. It may be, wanting to buy something for your family, wanting to better your life. It's not important, but that want of making money makes you want to put on bigger size than you really should for your account. And when you do lose that bigger size, you naturally try and get that money back. And then that turns into revenge trading, which then turns into a blowing account. So the cycle again is you putting on too much leverage, you losing that trade, you trying to get that money back, falling into a deeper hole to then eventually blowing account. And now that is a cycle that I've seen with traders for so many years, and that's a cycle that I've also been through. And the one thing that I can recommend to you guys is really, first of all, understand that, because we all know that we're revenge trading. We all know when we're actually doing something wrong. So to take a couple of breaths, 3 or 4 breaths when you know something is wrong, and then just cut the risk, or just cut the risk in general. If you feel like you tend to revenge trade, you got to find out what is those triggers. The majority is for over leveraging. So try and just cut the risk, or put a maximum lot size that you're going to actually use. There are different things. If you're a boredom trader, then get away from the screen. There are things that you can put in place will mitigate the risk of you doing these mistakes. So boredom trading, get away from the computer, go for a walk. Revenge trading, take 3 breaths, really understand, is this what I'm about to do? I know I'm about to revenge trade. I'm going to go out and I'm going to come back and see if I still want to do that trade. These types of things you really need to think about, because these are the things that people fall into bad habits over and over and over again. What about you, Sol?
That's very well said.
You've probably got some big comments for that as well, because this is something that you've seen quite a lot through traders over the years.
Yeah, but I really relate to what you spoke, and it's so easy to to give the advice and so hard to actually apply it. Mm-hmm. And myself, I kind of handled or took care about revenge trading and all these emotions that kick in by using risk management. So if you never go that big, if you really take good trades with small risk, the trigger will not come to you, and you take that loss, you shouldn't get triggered into revenge trading because you just lost so small that you can recover easily. The problem is when traders, get greedy and they start, risking a lot. Then those emotions come, and those revenge trading and over trading and over leveraging and all those start to happen. But for myself, of course, breathing techniques and meditations, those are great, and I use those. But I think the best way to fix revenge trading is fixing the source of it, which is most of the times, oversizing and over leveraging, and then making the loss larger, that so big that you feel that pressure of recovering fast. So if you handle the source, the source of the problem, which is the risk management, you never get to get that sensation of revenge, the need of revenge trading. So that would be my advice.
Yes, I think you hit the nail on the head. So because what I was going to say was indeed that one of the cause, I think, I mean, who doesn't make these mistakes from time to time, but why traders in general have issues with revenge trading, and not being able to handle the losses. The reason is that they are too invested in that trade. And what you just said, so where you lower your risk, you handle this by having a very conservative risk management where you're not risking that much on any single trade. That makes it almost impossible for you to be too invested in that trade. If you lose that, it's only a tiny bit of your account. It's okay. It doesn't hurt you. Doesn't affect you. It doesn't affect it doesn't get you out of balance mentally. So I think that there is the key. The key is to not put yourself in a position where you're too invested that this trade needs to work. Otherwise, you're not going to be able to pay something, or you're not going to be able to, I don't know, whatever you want to pay, or financial plan you have. If you have that linked to a trade, that's way too much. You're too invested in that trade. It shouldn't be like that. We should not be focusing on the P&L. We should be focusing on the process. And the way to do that is to, indeed, as Sol said, to lower the risk, because that makes it very comfortable to taking the loss, and you're going to be having a level mind to take proper decisions going forward.
Absolutely.
Mm-hmm.
What else, Victor?
Yes. So what we have here is we're getting to the last phases of our Q&A session. Let's see, what do we have in the chat? Do we have some questions to be answered by our esteemed people in the audience?
I do see. Maybe let me just address while you find the right question to answer. The next one. Let me just talk about the assignments. I see a lot of people asking about those. So through the week, we had 3 assignments. There was one on Monday, one on Tuesday, and one earlier today. So if you're watching this on YouTube, you should go to the page of the Bootcamp Training Week, and on the morning session, you will see the assignment. So there's a total of 3 assignments to upload or to complete. And if you're finding, I know with the first assignment from Monday, some of you guys are seeing like messages, moderation waiting, or something were wrong. Actually, don't worry, because on our side, okay, on the back end, we do see all of the attempts even to upload. So if you got to a point where you saw an error or moderation awaiting or something like that, just don't worry. No need to reach for support. We see all those attempts, and we will take those into account. And other than that, go to today's this morning session for today's assignment.
Great one, Sol. I
do like this question. This is a really interesting question. I'm sorry to jump that onto you, Victor, but
go ahead.
I think So if you went back in time and you were just beginning your trading career and you had to tell your younger self one thing that is imperative to your trading success, what would it be? Now, I think it would be, for me, to have more of a realistic expectation of what trading is, and actually have more structure in what I'm trying to learn, and also take the time to actually plan and journal my learning process. And what I mean by that is I actually wasted quite a lot of years making money, giving it all the way back, and not learning from it. And that was because most of the time that I wouldn't actually take the time to actually sit back and understand what the problems were and write down my processes and write down what was going on. Journaling in great trading journals and all of these things, Edgewonk, these are great tools and everybody should use them. But they're not obviously everybody, they're not the be all and end all. But when you're starting to learn how to trade, it is really advised to plan out a structured learning, a pathway, and really try and learn from your mistakes, because you will go through 4 years of chasing your tail because you're not doing those things. And try to not use too much leverage. So that was for me.
And would you say, Alex, what concrete action can they take to plan and learn from their mistakes? What can they do concrete on a daily basis? What kind of habits can they implement to do this, would you say?
Do you know, just a simple thing that when you've got into a trade and when you've got out of a trade, a couple of screenshots, mark out what's gone on, and then just at the end of the day, just write a couple of sentences of what happened. That's it. Could be a couple of bullet points. Gold was accumulating around a support level, broke out at the top of the range, retesting, continued to the 200 and EMA. You don't need much more than that, but just constantly getting that in your head. Eventually, those reps, you won't need to journal it anymore because you've seen it so many times. So,
in other words, journaling. You recommend everyone to journal so that they can learn from their mistakes and
journaling. I hate the word journaling because everybody assumes that you got your little journal and you're at the end of your little pretty little colors and stuff and all fairy dust. No, like at the end of the day, you get a piece of paper, and write down.
I love my journal.
Happened,
I don't know what you're talking about.
write down what happened with the trade, and that's it. A, B, C, what happened. Keep a Google Docs, and that's it. Just keep it super, super simple, stupid simple, as they call it.
Can I just jump in and say, you
Alex.
need a journal. Journal is super important. I know Alex doesn't like a journal, but I honestly, get a journal. Okay, get a journal, and then you whatever color you want it sprinkles on. I don't care. Get a journal. Start writing some things down. I think that whatever makes you a better person will make you a better trader. And I wish I knew that when I started, because I wish that the spending, work, so I worked in healthcare, and sometimes I worked, the night shift, and I worked over the weekend. So, working night and then coming home and spending all day on the charts, that is not going to be the recipe for success. I think it's better to have, a balanced life. I wish I understood early on that creating good routines and good habits and working out regularly, eating healthy, really taking care of yourself, because trading, what it's really about is it's has a lot to do with psychology. It's a lot to do with mentality, because we all know what the break and retest is. Okay, We get a break. We get a retest. There's a bullish engulfing candle. We all know that it's profitable. Now go trade it. It's not as easy as it sounds, because you're going to be revenge trading. You're going to be FOMOing. You're going to be doing stupid stuff, right? But if you develop a personality where you are not only, you want to be consistent, but you are consistent. So it's your personality, I think it's super important to really, and have a journal, really.
What
I
color
was
is your journal?
What kind of journal?
No,
I
what
got a
colour?
black one. I got a black journal. There's no colors in this.
I was gonna say, Alex, it's okay to have a journal. The same way
Yeah,
that
it's, yeah,
Jonathan,
exactly,
it's
Alex.
it's
You
okay to
you
have an
gotta.
indicator on the chart. Alex, it's okay to have a journal. It's
Thanks,
fine.
guys. Okay, thank you, guys.
No, but I
So,
think Alex, what you do, sometimes you look at your losing trades and you're like, okay, I shouldn't do that, and then you stop doing that. That's the same thing. It's trial and error, basically, right?
trial and error. Saul, what are your thoughts?
About journaling, or about what would I say myself 10 years
What-
ago?
If you want to tell us the color of your journal as well, it's totally up to you, man.
No, I confess that I don't journal a lot these days. I just, it's like trading has become my second nature. Is that's why I don't journal. Every single task I do every day in my life, because I see trading like as something that it's part of my life and my routine. And I told you, I do know when I need to stop and tweak something, because I'm going to losing periods or something like that. But I don't. These days I don't journal. Each trade I take and journal it and record it and all of that. But for sure, for someone just starting out and wants to understand, okay, when this works better, why this time the market the setup work out and the next time failed, journaling is the way to go. And for I would tell myself, if I was just starting today, a couple of things that to add to what you mentioned previously, Alex. I would actually start from the larger time frames. I would try to understand the large movements of the markets, from the dailies, from the weeklies, to understand, each market that we're approaching, is different. The forex market will tend to be more rangy. The stock market will tend to be more trendy. But I'll try to understand the fundamentals or the macro movements behind the market I'm trying to trade. I'll try to find a mentor or a community to support me. Someone that I can, tell what I'm experiencing and get feedback from them, because and especially if you're getting feedback from someone experienced or a trading coach or something like that, will save you, years of struggling trying to understand why something is not
Agreed.
working out for you, right? And we tend to think that of trading as a solo profession, and we struggle alone. And if we find this mentor, this coach, or this community to support and to feedback what we're doing, that will help us out in the process of becoming consistent and profitability, and understanding why things we're doing are working or not working properly or as expected. So those would be extra advice I would give to myself if I was just starting out.
All right, so I think
Nice.
this has been a really awesome experience, I must say. Like this whole week, we had technical analysis, we had a fundamental analysis, we had mental analysis, trading psychology, and now we have this where we basically talk about. I think if someone new trader comes in here and goes through this week, they're going to have a lot of information and a lot of knowledge that they can use to really improve their trading. But it's not over. It's not over. This is the last live stream. But then we have tomorrow is the time to complete all the assignment. We're gonna have we're gonna be seeing a video tomorrow as well, where we talk a little bit about the overview of the assignments as well. And we do have instructions for every assignment as well on the event page. And yes, is there anything? And of course, after the event, a few days after the event, you should all keep an eye on your email inbox, because that's where you're going to get a special surprise.
That's true. That's true. You know, everyone, we're going to upload to the page probably later today or tomorrow morning. You know, the summary of the assignments, and again the links, so you're certain of what you need to do on each one of the assignments. Over the weekend, over the early next week, we're going to go through the assignments and make sure, you know, those who are qualified get the link to get the bootcamp account at only $10. And just maybe closing the week, because today's the last live stream, as Jonathan mentioned. If you just find out about, you know, the 5ers, thanks to these live streams, you know that every, you know, 3 times a week, you have, you know, Jonathan and Victor and sometimes Alex or myself, you know, doing this kind of live streams, very more hands-on than theoretically, that like we did these times. We're going to trading and executing trades and managing trades. So it's a great space to learn and watch someone executing trades and managing and learning from them. So please join us on our live streams. Do subscribe and hit the bell button to our YouTube channel to know when are we doing these live streams. And I want to thank you guys all, you know, for joining and being part of this project. It was, you know, traders don't see the whole month it took us to put all this event together, right? And of course, thank you, Jonathan and Victor, for leading the content through this week. And of course, Alex, that's always a crucial piece of every project we put together. So thank you, everyone, and thank you, traders. And I don't know, maybe last words from you guys. And, you know, thank you, everyone.
Yeah, no, I would like to thank everyone as well. And we do have, like Saul says, we do have the live trading room, same time as this one, every Monday, Tuesday, and Wednesday here on YouTube, where we do, you know, we're full-time traders, we're professional traders, we trade every day. So what we do is basically we share our analysis, our thoughts on the markets, and you follow along with our trades. And we got big plans coming up for the live trading room. We want to make this the go-to space to get the information that you need on technical analysis and also the high time frame levels that we're looking at. We're going to be scanning almost all the forex pairs, so definitely tune in next week as well. I think that's it. Anything from you, Alex and Victor?
Not just it's good to be a part of this panel. And you know, guys, if you're struggling with trading or anything, then just hop in and join us. And we're always live and we're always taking trades and we can help. But don't give up, you know, because you could be super close from having a breakthrough. And I think there is a long, you know, there's a lot of struggles in trading, but once you pass it, then it's just upwards from that.
I'm very excited for all those traders who are, you know, on their journey to getting to profitability, because with this week we have offered them all the tools they need. The only things they need is they need to study it, apply it, understand it, and use it to their benefit. And I'm excited for them, because this means that after this week, we're going to be having a lot of traders coming on, showing, you know, greater skills, having higher levels of knowledge. And we are here for you. As you have seen this week, this week is the evidence, as you may have seen many times in the past, that our interest is aligned with yours. We want you to succeed. That is our goal, because when you succeed, we succeed. So we are here for you. And I'm very excited for everyone following, and I hope everyone is doing their assignment diligently. And we'll be seeing you on our live stream, as we have already mentioned. That's it. It was a pleasure for me, guys. Thank you all.
Thank you, guys. See you next time.
Bye.
Bye-bye.
Bye.
Muted as always. See you guys. Take care. Well, it's not an ending without me being muted. All right. Take care, guys.
Absolutely.
See you guys next week.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.